Manish Jain from Centrum now joins in to discuss the market fundamentals and his top sectoral picks. Manish, hi, welcome to the show. Well, it's a milestone event, 25,000 here for the Nifty, but the big question is that should one probably take some profits off the table now, or should one continue investing? Do you think that valuations have now become a little punchy and it might just be prudent to have some cash?
No, I don't think so. I think the markets will continue to rally from here onwards also. So there are three things that continue to play on my mind. See, one is that most of the big events that had to be played out have kind of happened, right? So the elections had to happen, the results are out of the way, the budget has happened, kind of a mixed bag, but it's out of the way again. So there's no overhang which is left in the market. The monsoons have been progressing fairly decently well. The rural growth, the volume growth, especially in the FMCG sector, has now started showing some green shoots of revival over there as well. We saw the quarter from HUL where they reported about 4% volume growth. So that has again been going well. So most of the larger events are kind of out of the way, which is point number one. Point number two is that we are still holding on to the estimate of about 12% sort of earnings growth as far as Nifty is concerned over the course of this year and the next one. So that means that on a 1 year forward basis, Nifty will be somewhere in between 21 to 22 times P multiple, which is not exactly in a very expensive zone. Bubble starts getting formed when it's about 23, 24 times. And then liquidity is just so strong. The domestic liquidity from retail investors, the SIP money, 21,000 crores a month, is just so strong that given the fundamentals of the economy, when you look at the budget, the kind of fiscal deficit numbers, government borrowing program, rate cut is kind of on the horizon. I don't think the markets is going to experience any major correction anytime soon. So I would expect, I would advise people to kind of continue investing over the course of next few months.
Manish, you're talking about more investment opportunities still available. I was looking at some data. The Nifty small cap P is at around 22. The average P has been around 15. The Nifty current P around 20. And the average P has been around 18, right? So there is still a premium that these indices are trading at. So in a market like this, where do you find opportunities where you can trade? What are some of the sectors you think would still see an upside potential from here?
So the thing is that, see, one is that the data you provided is absolutely right, which is if you look at the long-term average, Nifty is traded at around 18 times versus now where it's trading at close to 21, 22 times or somewhere in that range. But the point is, if you look at the last decade, which was 2010 to 2019, 2020, the average earnings growth from Nifty was about 6%. So we were paying 18x multiple for that, which is roughly about 3x PEG. But today, the same Nifty is delivering double-digit earnings growth. So it's less than 2 times PEG, right? So when systematically the ROEs of a market moves up, when the profitability moves up, when the overall leverage in the system, as far as listed equities are concerned, kind of move down, then the multiples will be at a slight more premium as compared to the last history. So that's not what I'm worried about. And second is that when you look at autos, when you look at banks, even the larger 4 or 5 banks that trade in the market, what you realize is that the rally has not been homogeneous in the last 1 year. Not every stock in every single sector that has done well has kind of participated. It has been a very concentrated rally in some of the sectors, in some of the stocks. So if you do a very strong due diligence and have a bottom-up approach to investing, you'll still find enough investment opportunities. We continue to be very, very constructive on IT. We continue to be very, very constructive on the consumption sector. We continue to be very, very constructive and overweight on the real estate sector at this moment. Banks probably not as much, but NBFC is definitely, again, very, very positive in that sector. And again, pharma will continue to see some bit of a rally again going forward from here.
Okay, just quickly, Manish, I wanted to specifically narrow down on the Nifty PSE index. As Mangalam was pointing out, it's gained around 95% since September of last year. And the big question is, should you be putting more money into such stocks and within that index? What is your sense? Do you think that the run-up has been far too great there and one should probably stay on the sidelines?
Yeah, so it's not just Nifty PSE, but when I look at defense stocks, when I look at some of these stocks in the construction, in the infra side, when I look at some of these manufacturing names as well, the same question kind of comes into my mind is that whether these stocks are kind of running ahead of their fundamentals. And at this moment, these are the sectors where we are kind of sitting on the sidelines. We are not taking fresh bets, but we are not taking money off the table where we had been invested historically. So that's the approach we are kind of taking. So definitely in terms of risk versus reward, these sectors have definitely seen a very significant run up as compared to what the near term or even the medium term earnings growth are over there. So any kind of correction over there, time correction also, I'll probably start looking at it, but at this moment kind of sitting on the sidelines, definitely.
Okay, all right. Manish would have liked to chat a little bit more, but out of time, a lot of moving parts in the markets today. But thank you so much for joining us with your take. That's the market advice. But let's get you a